Stocks rebound, tariff fears ease, and Trump is becoming, dare I say, more predictable? Let's dive into all this and more as we recap what happened in the markets in May of 2025. Number 1, stocks stage a full recovery since the original fallout on Liberation Day on the onset of reciprocal tariffs. This recovery is on pace to be among the fastest recoveries in stock market history. Very similar, actually, to what happened after the COVID fallout in March of 2020. The reason for the speed of this recovery was due to the fact that after Trump announced the original pause on his reciprocal tariffs, the markets immediately jumped 10% in a single afternoon, marking one of the largest intraday increases in history. Number 2, fears and uncertainties around tariffs are now lower than they were before Liberation Day even happened. In fact, the VIX, commonly known as Wall Street's fear index, is now lower than it was before the start of Q2. As of the close of the market on May 14th, the S&P 500 is down just only 4% from all-time highs. Pretty significant when you consider just a month ago the S&P was down 19% from all-time highs. Number 3, and this is a personal opinion, but Trump is becoming more predictable in his policy and his execution. Again, this is my personal opinion, but it seems that after the initial recovery, after Trump announced his pause, his approach towards tariffs seems to be a little bit more diplomatic than originally stated. In fact, his advisors that are actually carrying out the policies and are on center stage are different today than they were a month ago. This seems to be a clear indicator that Trump is more of a pragmatist when it comes to policy and that he will respond if bad headlines seem to dominate the markets. This is one of the biggest reasons for the speed of the market recovery because the approach on how Trump handled the tariffs seemed to be more haphazard in April and has now seen a dramatic shift towards more pragmatic and diplomatic policy. Additionally, we have seen that when headlines permeate the markets, we do see a shift in influence inside the White House. The clearest example of this shift in advisors is that Treasury Secretary Scott Bessent seems to be more on center stage when talking about tariffs and the markets in general. This is a clear change from when we saw in the middle of April when we had a lot more of Trump's other advisors talk and we saw markets precipitously fall as a result. The markets are responding a lot better to this pragmatic and diplomatic approach to tariffs and global politics in general than they were to the original haphazard policy back in the beginning of April. All the things I just mentioned should cause stock market volatility and global market volatility to continue to decline. If that happens, we should naturally see markets continue to rebound as Trump continues to make new deals with countries regarding tariffs. Right now, we have the UK and China in the bag when it comes to deals, but now the focus will shift to Europe, where the next stage of the tariff game will be played. We will see what the effects of those policies are in our next video. Hey, if you like this video, thanks so much for watching. Please like, comment, and subscribe so you can get more notifications when we upload new videos. Thanks so much for watching. I'll see you in the next one.